Let me start with, if you're in the camp that thinks the Fed is making an error by tightening here into what appears to be a slowing economy.
Well, I think the Fed had the real opportunity of a soft landing if they had left things alone. But again, the dynamic in terms of inflation was naturally going to scare them. No central banker wants to be the one to let the inflation genie out of the bottle. So the net result is all they've done against the backdrop of their tightenings that are priced into the curve, and more will be priced into the curve after the meeting tomorrow. And the energy spike that we talked about earlier is the risk of a hard landing has gone up. I disagree with those 33% of the economists who say a recession has gone up in probability. I don't think it has, because balance sheets haven't deteriorated at all in here. And balance sheets are what really drive credit cycles, and credit cycles are what really drive in business cycles since 1990. So we don't see that at all. But we do see a hard landing as an alternative scenario.
What do you mean by hard landing then? A hard landing for the markets?
Well, it's a hard landing for the economy, which is, an economy that falls below potential GDP for several quarters and may even have one quarter of negative GDP. But it falls far short of a broad-based decline in incomes, production, orders, and shipments that define a recession.
Got it. So Steve sort of framed the question as, will higher prices be their own cure for higher prices, or does the Fed need to tighten in order to keep or bring inflation down? How would you answer that question?
Well, I think they needed to do some tightening, but they didn't need to do as much as priced into the marketplace. So I think there's a combination of some monetary policy tightening that is necessary, while a fiscal policy tightening is going on as well, because the budget deficit is dropping by about $1 trillion this year. But the uptick in inflation in and of itself is an additional drag on the economy, which was allowing them to potentially get to a soft landing scenario. I think the tightenings that are being priced into the marketplace now, and what will be additionally priced in as we go forward in here, are increasing the risk of a hard landing.
All right. So, Steve, best guess for our investors and traders who are watching right now, dovish hike, hawkish hike tomorrow? I assume you're not in the no hike camp.
Well, the market is going to take it as a hawkish hike. Right? No matter what this chairman says or does tomorrow, they're going to have to admit that 50 basis points was discussed. They're going to have to admit that balance sheet reduction was discussed. And where I think the Fed would make a real policy mistake was if they would go to an aggressive balance sheet reduction. I don't care if they begin to pull back on the MBS portion of the portfolio, but going about actually pulling back on the Treasury portion of the portfolio while they're also raising interest rates, I think would be the real policy mistake environment. That's what I think could trip over themselves and create some kind of financial dislocation that forces them to reverse gears quickly.
All right.